If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's May 15, 2020, and today is Friday morning. So looking at the highlights of the day, what a crazy day on the Dow Jones, having a roller coaster ride. But first, let's take a look at the economic events of the day. So really just one event coming out later today at 2:30 South African time, monthly core retail sales numbers coming out of the United States. And since it's so close and so related to consumer spending, this number is very important. So just be aware that it is coming out at 2:30 South African time. Looking at the markets, the euro bouncing off support in the currencies while the GBP is still very weak. We're going to take a look at that in just a second. We mentioned that the Dow Jones has a plus 700 point V-shaped move yesterday. Unbelievable. And we saw the commodities actually perking up. All right. They look like they want to be charging higher. And lastly, looking at the stocks, it was JP Morgan that bounced sharply, but really it was Cisco that carried the market higher yesterday. Cisco came out with beating its earnings. Now, Cisco is a big component in the United States, a big networking company, and it's a bellwether. So that really carried the market higher. But let's take a look at the markets and see what we can expect from today's trading. So we're going to take a first look here at the Euro USD at a 30-minute chart, just to give us perspective. 107.82 was your bottom, and we bounced nicely off of that. Now, it's not a major bounce, but decent enough, okay? Decent enough to really carry us higher. Now, it is still in a very tight range, okay, relatively to the other assets classes that we've been promoting for you guys to trade, because this is really on a much tighter range. It's much harder to make much more volatility and make much more profit in such a tight range. So just be aware of it. We're at 108.04, which is basically a 35 to 40 pip move, okay? So just be aware of that. Now, looking at the GBP USD, not bouncing much off of it. When we're looking at a 1 hour chart, we see we're really very, very close to this support level. And like I mentioned before, if we do break it, we do breach it with some momentum, we could see it correct itself to the 119-ish level. Now, looking at the USD ZAR, we mentioned this yesterday, it looks like it's forming somewhat of a wedge formation. On a daily, at least, it looks like that. Okay, as you can see here, a wedge formation, which includes something that will be a drastic move in either direction. Okay, so just be aware that may actually happen, and we may see a correction for the dollar versus the rand, as it's been so hyped up since the coronavirus actually happened. Now, looking at gold, we're looking like we're challenging this upper limit, 1741. But remember, we've got to break the 1741 with some momentum, with some kind of volatility, because it's going to continue trading within this range otherwise. Okay, so just be aware of that. Now, looking at oil, also perking up to 27.85. Now, your next resistance level is 28.94, and this has gotten some momentum since last week and then consolidating a little bit, but it's showing some maybe light to the end of the tunnel with the easing of the lockdowns, with airline companies saying that they're going to be resuming their services, maybe a little bit less, but they're going to be resuming their services towards the end of May. So that's adding some positivity to the price of oil. Now, jumping into the Dow Jones, this is what I'm talking about. Let's look at a 30-minute chart to give us perspective. We sold off tremendously this past week, and we capitulated the sell-off from 23,100-ish level down to 22,600-ish level. This is what we're talking about, this V formation. And then we carried us higher to 23,568 is where we're trading right now. So with that said, we do have a little bit of turbulence at 23,741 and surely at 24,000. So that is really where it's at right now. Now, the markets are still trying to feel out exactly where they want to go, because ultimately there are some companies that are still doing okay, and possibly they'll be able to skirt off a recessionary fear, okay, even though that we're in this atmosphere. Okay, not everybody is not making money. Just, in recessionary times, it's not that there's no money to be made. It's a rotation of money. It just goes somewhere else. So looking at that, okay, we may see ourselves actually bouncing higher going into the end of the week. So just end of the weekend today. So just keep that in mind. Now, what I'm talking about, if you look at JP Morgan yesterday, it bounced severely up to 87.93, hit that resistance. And I think we're going to be trading within this area. Now, we've breached the $90 area, so I don't think we're going to get back to that area, but we'll be trading between this 87 and 83-ish level until some sort of impetus comes up. Now, if we look at the tech stocks, they were strong, okay? They bounced yesterday, all right? Nothing to really write home about, not the, big moves that we expected, but they did bounce, okay? So whether or not this is a bear flag will prove to us as we go into today's trading. Now, there's got to be follow through in the buying for us to say, hey, okay, maybe it is getting a little bit of a bull market, maybe just a small bull market, getting us back to 24,000 in the Dow, but getting us there in any event. Now, looking at Microsoft lastly, and we saw it perk up as well, but nothing really to carry us up to the highs again, okay? So that's disconcerting a little bit, as we get into the weekend. Okay, if we look at Facebook, it's the same thing. We see a little bit of a bounce, but nothing, no massive, rally back to the top. Now we look at the NASDAQ also. You get a little bit of a perk, but nothing pushing us back to its top of 92,400-ish levels. So something to consider, right? So it's a little bit of a mixed message right now. We look like we're getting stronger, but at the same time, these stocks could actually, fizzle out. We are in the middle of May, which leads us into June, where it's usually a sell-off time anyway. As the saying goes, sell in May and go away, as most of the fund managers are on vacation over the summer. So this is unprecedented times. So we're seeing a little bit of a rotation. These massive V formations, okay, are normal, okay, in these type of environments as well. So just keep that in mind as well. This is Fred Razak. I want to wish you guys a great trading day and a beautiful weekend. Thank you.